Welcome to PODTales, a podcast series where we learn about investing and explore great opportunities for investors. I'm your host, Annie, and in this first podcast of the series brought to you by Baroda BNP Paribas Mutual Fund, we'll explore an investment vehicle that most investors will find suitable, in their investment journey. Balanced Advantage Funds, popularly known as BAF or BAF, we'll discuss how investors can leverage the benefits of BAFs, demystify BAFs, and offer insights that could benefit investors. But before we get into that, I want to tell you a little story because we all love a good story that ends well, don't we?
We all have our favorite stories and fables that teach us some wisdom. They're popular and stay with us for a lifetime, and for a very good reason. They pack some timeless messages. Take, for example, the story of the one eyed doe. The moral of this story is for us to be adaptive and ready to face any situation. Do you recall this familiar story? Let's summarize it briefly in a minute. Once upon a time, there was a doe who had lost an eye. She merely gazed near the sea, positioning her good eye towards the land and her blind side towards the sea. She believed that this was the best approach to protect her from wild animals, and this approach would keep her secure, giving her ability to spot any danger from the land. Little did she realize that the danger can come from anywhere. She failed to notice some boatmen approaching from the sea. She was literally blindsided by their attack and tragically fell victim to their arrows. The first lesson here is adaptability. Be adaptive. Read your situation and alter your approach accordingly. Just as the doe failed to adapt to her surroundings and prepare for the upcoming danger, investors who do not adjust their approach according to changing market conditions could become vulnerable to setbacks. Staying vigilant and balanced when it comes to our finances and investments will help us avoid mistakes and reduce risk. Managing risk is a necessary skill. This fable teaches us that trouble can come from anywhere, not just where we think it might come from. Broader awareness can help reduce risk, but fixating on any one anticipated risk may be detrimental. And there you have it, investment advice from a beloved fable. So, in summary, the fable of the one-eyed doe teaches us that prudent planning and flexibility allow us to stay aware and nimble, giving us a better perspective. Even in our investments, we need to have a balanced approach in our investments and mitigate risks to ensure sustainable growth and protection of capital.
As per AMFI data from January 2019 to January 2024, the AUM of balanced advantage funds has grown from 89,028 crores to over 2,46,000 crores, showcasing the absolute growth of 177% in 5 years. Isn't that phenomenal? Let's try and understand what is making these funds so popular. And is it worth thinking for our portfolio too?
Okay, now let's dive into the world of balanced advantage funds. In the next few minutes, we'll uncover how BAFs help investors reach their financial goals and why it should be an integral part of your portfolio. Joining us today is Mr. Suresh Soni, CEO of Baroda BNP Paribas Mutual Fund, a man who has seen it all in his 30 years in the financial sector. Welcome, Suresh.
Thank you, Annie.
Suresh, let's start with the most basic question. What is balanced advantage funds?
Sure. I think it's always good to start with the basics. So, when it comes to investing, we essentially think of two vehicles primarily: equities, which all of us know create long term wealth and really are helpful in creating a good retirement nest or meeting our goals. But then the challenge is it comes with volatility. And on the other side, you have fixed income or debt, which gives you steady return but does not necessarily create wealth. And BAF is a vehicle which actually invests into a good proportion between these two asset classes so that you can get growth, which equity gives you. But at the same time, you don't experience excessive volatility, which comes with it by having a good combination of debt or fixed income as well. So essentially, BAF are products which fit in a category of mutual funds that we call hybrid funds, which means they take multiple asset classes, equity and fixed income in this case, equity for growth, fixed income for stability. So the end result is you get growth of capital with relatively better stability compared to pure equity funds.
Wow. You know what? It has been such a simple as well as very understanding explanation that you've given, Suresh. Now, this then leads me to the next question. What is the speciality of balanced advantage funds?
The specialty of this product is this is done in a very active manner by fund managers. And how does the fund manager do it? The fund manager looks at relative return prospect of both equity and fixed income at various points of time and decides to invest more money into equity when the valuations are looking attractive and therefore you have a better opportunity to make money. And similarly, on fixed income again, you raise the allocation when you have a little bit worry about valuation. When the equity markets are booming, they are rising, more and more people are drawn to them. And therefore, they end up allocating money to equity market exactly at the wrong time. And similarly, when the markets come down, whether it is 2008 Lehman or COVID or any massive correction, people become super scared and they don't want to put money into the market. So, to overcome this emotional bias, what we tend to do in balance advantage fund is use a model so that we are basically following a very time tested formula of investing. So the models are usually based on valuations, and therefore, when the valuations are attractive, the model guides the fund manager to invest more in equity. And when the valuations become very expensive, model guides the fund manager to reduce equity exposure. So rather than investor having to mentally do it, the fund does it for them. And therefore, what investors get is a good composite solution, which comes to them by virtue of these funds. And the fund manager does the allocation, and investor gets a much smoother journey. The other advantage, of course, tends to be that these funds are structured in a tax efficient manner. And therefore, the incident of taxation and frequent churning is reduced so that it becomes a relatively simple journey for investors where they invest and then let the fund manager take care of rest.
Okay, then that brings me to the last question. So, what should an investor consider before investing in this category?
Sure. So balance advantage funds are, as I said, is a all season vehicle because irrespective of the market situation, you can invest in these products because they in turn allocate money based on where the valuations are. So one, think of it as a basically a core allocation in your portfolio. However, please remember that because these funds allocate money to equities, they would have intermittent volatility. And therefore, please take a view at least of about 3 years while investing in it because intermittently equity markets go through their own ups and downs. And we don't
Sure.
want to be in a situation where we have invested today, but we are whipsawed by the market coming down the next quarter or thereabout. Markets are always unpredictable in short term, but they create wealth over a long period of time. So take a calculated bet, keep aside money for a reasonable length of time, and I'm sure you'll find BAF quite exciting as well as rewarding for investing.
Oh, that's lovely. In fact, it has been such a beautiful discussion where we've understood so much more about balanced advantage funds, which have been doing so well in the market. Insightful discussion indeed. I think it's a good time then to do a quick recap of today's episode for our listeners, right, Suresh?
Sure. So, very simply put, I think wealth creation, and which is the objective of all the investing that we do, because at the end of the day, you are investing because you want more money tomorrow. So, wealth creation requires us to be patient long term investors in equity market, and balance advantage fund helps you smoothen that journey by making sure that they are allocating money more to equity market when the markets are attractive, and at the same time they are taking profit away from the market when the valuations become excessive to make allocations and benefit over a long period of time.
Suresh, it was indeed amazing to have you give great advice on balanced advantage funds. In fact, I was particularly happy about the one-eyed door story that we talked about on the episode today, because that was a very good live example for anybody to understand the importance as well as the effectiveness of balanced advantage funds. Thank you so much.
Thank you, Annie. Delight talking to you, and thank you for weaving the story as well as learnings together.
That also brings us to the close of this episode then of Pod Tales. Dear listeners, if you've enjoyed today's episode, you need to check out more on our podcast for further insights. Stay tuned for more insightful conversations. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.